Sam here, and I'll be doing the premium video for OPEX October 2025. So in the video we're going to be covering what we usually cover on the Friday video. We're going to be doing a top-down perspective going into next week. I think this video is probably more important than probably the last 5 months at least worth of videos, just because the last 5 months it's just been the same record on repeat, which is everything looks great, buy every pullback, don't stop buying until it stops looking good. And it's looked good continuously for basically since the April lows. So what does that look like on a chart? Well, it looks like this, right? You get the buy signal here at the end of April. That launches you into the sky, and during the entire time you get no sell signals, not through here or here or here or there or there or there, right? No sell signals to speak of. And then the unthinkable happens and you get a sell signal for the first time in a couple of months. So what now? Well, I have a bad habit of calling this a sell signal. Really what it is just a transition signal for now. A true sell signal would be if the candles were red and then you had this, right? Then that's just a straight up sell signal. In this instance, you still have an uptrend. Your structure is still sound, green structure, that's still good, but you've lost all momentum. And in losing momentum, you then lose a lot of the qualities that give the candles the color, which in this case was green. So now what do you have? Well, you have your first down arrow in a very long time, and then you have this, which is kind of crossing back and forth. At the end of the day, unless it's firmly above, it will register as no trend. And when it says no trend, you trust the lower indicator. So that is a little bit of an issue there on the indexes. Again, it's not a sell signal per se. And of course, maybe this is just kind of the pause that refreshes before we go higher. At the moment, I don't have very much of a read on it, so we're going to have to find out together as we go through this video to see what we find and how everything's shaping up essentially. So collectively, we'll all be a little bit smarter at the end of the video. Also, as a little bit of a tease there, before we get to the end of the video, in the last Friday video that I did 2 weeks ago, I showed you one stock and one pattern that was on that stock. So we're going to go back and revisit that at the end of the video, so stick around for that. And before we go to the next thing, which is going to be the Nasdaq, do drop us a like, drop us a comment on the video. It does help us out a lot with the algorithm. For the comment, it doesn't have to be anything specific. If you have any questions, I'll come back and answer you in the chat. If you don't have anything to ask, then just let us know what your pet's name is, or your favorite drink, or what are you having for dinner, and the algorithm would certainly appreciate it, as would I. So let's move on here. Let's go to the Qs. We always spend a little bit more time on SPY just because it's kind of covers everything, and then we can go a little bit faster on the Qs. So much to no one's surprise, I'm sure. The Qs have the same exact issue, which is just a complete momentum loss after an extended amount of trend. I would say the Qs are actually a little bit stronger here because they actually do have a little bit of momentum still left inside, whereas the SPY has drained its momentum. But you can see the candle shift there as well. It's shifted pretty solidly from green to gray and blue. Again, though, if you look at it from a weekly perspective, it really is just an inside week. But there are some elements that we'll probably see here in just a second that are shaping up that look different than every other pullback that we've seen, not just from a peripheral perspective, but also from just this signal perspective. And then you have the squeeze forming, but the squeeze here is forming in a bad way, right? It's forming in a downward structure, which, inside the context of these signals here is a little bit suspect. So let's continue forward. We'll mosey through the rest of the indexes, and then we'll get to the good stuff here. Or maybe this is the good stuff. You don't know whether it's the good stuff until you look back on it. So the Russell here, new all-time high. They say there's no such thing as a triple top. We'll see what the Russell has to say about that. But same thing here. Again, probably the strongest of the bunch. I would say the Russell is the strongest of the bunch. It's actually the only one this week that made a new all-time high as well. But this all-time high on the Russell was rejected. So this is a concern here because if you look at these two candles, last week's and this week overshoots the candle, right? You have this big wick, but then you close within the body of last week's candle. So not really the best orientation. It's kind of a neutral candle, but the fact that it's got this huge rejection wick at the top is not usually my favorite thing. So I'd want to see the Russell here, the IWM, get back above 245 and use that as a foothold. As long as it's below 245, which is a previous major level, I would be a little bit distrustful of it. If it gets back above 245, I think you can trade it with a stop below 245, but below 245, I would look at it somewhat skeptically. Let's go to the peripheral parts of the market here, because although there are some major changes in the indexes that we just looked at, and pretty notable one, meaning the first reversal signal in 5 months, let's kind of look around and see what else we find here. So today's action in HYG is actually somewhat bullish because it's nominally up with bonds TLT down, which is going to be read as a good thing. But you can see here that the structure on this chart is also starting to change, right? So you went up here, you were green, green, green for weeks and weeks, very bullish, nothing to be afraid of there. And now you've kind of sliced through the weekly 8, and then you also have, of course, your thrust lower signals and the corresponding change of the quality of the candles. So they went from green to blue, which is a loss of strength, and then of course these have gone from green to gray, which is a loss of strength with negative momentum. So this particular chart does not bode particularly well for what we're seeing in the indexes. This is not as sided to the bulls as it once was, which is an issue for them. So they had the HYG as kind of a shield for months, and as of right now, I would say that HYG is no one owns HYG here, right? The bulls owned it for about 5 months or so. I wouldn't say the damage is strong enough for the bears to own it quite just yet, but the bulls have given up the reins there on that particular instrument. And if we look at the dollar here, again, just looking for some slight clues of things that we don't normally look at outside of the indexes. And the dollar here has a big ass base. So this continues to be a little bit of an issue because you don't want to see the dollar kind of go up, especially not with any kind of speed. So I think that would be poorly received, but there's no major signal here quite just yet. One thing that did have a nice signal was bonds, which we've been trading in the room together. We've had a trade in TLT now for at least 2 or 3 weeks. So ZB, you can look at ZN, ZT, it doesn't matter. And I don't think that this is bullish, by the way. I want to show you this only because I don't necessarily think that this is bullish. I think a lot of folks will say, well, interest rates are going down and that is bullish, but I don't think that they're going down for good reasons, right? And that's a major thing. If you have a week where TLT's up a lot, but HYG is down, that means that bonds went up for bad reasons, right? Fearful reasons as opposed to bullish reasons. But right now, this chart, it's starting to develop pretty decently, and we'll just see how it trades going into next week. So I did tell you that we'd go back and look at one chart that we looked at last week. And if you recall, I showed you a pattern that I don't think is in any textbooks, and we called it the Botched BBL. And you can figure out what that means. And this one played out. So I told you pick up MP at 70. The natural place to have sold it is 100, which is the trade that I did. But not too bad at all. It did come into 70. Like I told you, we talked about it somewhere in here. And I was like, wait for 70. It comes into 70. and then straight up into 100. Huge move, absolute banger of a trade. Let me show you the setup again just so that you can kind of see it in real time. And at this point, I don't really know what the next move is on MP. Frankly, I don't really know what the next move is on the market, just because everything's gone neutral. And that's okay, right? My job is not to be Nostradamus and know the next move. My job is just to say whether I see edge in a particular spot, and then I put the money in the center. If I don't see edge, and I'm being a good boy, I don't put the money in the center. And that's pretty much the entire game. So when I showed you this chart, I did see edge, and I was willing to put the money in the middle. So let's cover this pattern real quick so you know what to look for. So we were looking at this one kind of as a double bottom with a higher low, a little bit of a lopsided BBL there. Squeeze, it was max bull all through here, as is evident by the dark green bars. And then it did have bull slingshot. Now it has bear slingshot, which is not good. We don't like that. But it did have bull slingshot from back here when I told you to get in at 70. And then from 70 to 100. That's a very, very nice move. So hopefully some of you caught that one, and hopefully hopefully you had enough sense to ring the bell there at 100 as well. So we'll see which one is kind of in play here. In terms of something similar, but I don't have the confidence in it that I did with MP, just because I don't have the confidence in the market yet. But this one is setting up as well, and it's going to be SMR, and this is going to be nuclear. So on this one, the big ticket item here is the weekly chart. The weekly chart looks very nice. In terms of something big, like a larger stock, so this is kind of the more speculative pick. Again, be a little bit judicious with this one, because what you need to see, or at least I'll speak for myself, what I need to see before getting into a serious position here, something similar to MP on SMR, and I would love to. But what I would need to see first is I would need to see a buy signal from the index, right? I can't buy all this like go-go hyper stock stuff if it doesn't have a signal from the index. So the setup here on SMR is right here. Max bull, bull slingshot. It has a nice squeeze. The only thing that it's missing is a halfway decent market behind it. So there's that one, and then I'll leave you one more that I think has been a pretty popular pick. This one's kind of on the other end of the spectrum. This was a large stock. Obviously, you're going to know this one. And I think from what I've seen, this one has the best setup for any large stock. There's no other large stock that I found of this size that has this good of a setup. So it's going to be Google if it ever loads. Okay, well, I'll just, for whatever reason, Toss is doing that, so I'll just let it be. But you have a slingshot squeeze, and you have a bull 90 score, right? And you have earnings coming up. So very nice potential for a little run into the report. Again, be mindful. I gave you two ideas there, SMR, Google. Both require a decent market, probably SMR more than anything. So keep those on your watch list. I think SMR has the potential to be MP version 2.0. I'm waiting for a buy signal from the index. Because the indexes have a squeeze and are neutral, I'm trying to keep an open mind to both sides. And whenever you're in a neutral market with high volatility, that is 100% the time to look to start doing day trading and shorten your time frame. So shorten your time frame and do about half your position size, if not less, just because the volatility is so great. So that's how I'm trying to manage this going into next week. And that's how we'll do it. So next week will be very interesting because you have the squeeze, you have a neutral market, you have pretty strong negative seasonality for this month. As always, the weekend could bring anything in terms of a tweet. So the next move is likely tweet determined, tweet based, and just stay ready for it. And that means, at least for me, it means to be very light on my feet, be very quick to change my mind, and not get overloaded on one side so that it becomes difficult to flip if the market generated data implies that I should. That's my time, guys. See you next time. Cheers. Drop us a like. Cheers.